Oh no, we want to tuck in one more question. So is there a presidential candidate who is considered to be better for the crypto world?
So look, I think it's a mix. Okay, so former President Trump has kind of styled himself as the pro-crypto candidate. He has put forth a number of policies, adding Bitcoin as a strategic reserve, which like we hold gold, for example. He's also really focused on light touch regulation. I will highlight, like a couple years ago, he was saying crypto's a scam. So this has been a 180. The people that I'm talking to in the industry are saying, look, I don't know if he's really going to go through with this. VP Harris has not taken an official stance. She has met with industry leaders, but the Biden-Harris administration has been perceived as very anti-crypto by the industry. So I think a lot of the people that I'm talking to are saying like, look, she hasn't come out and said anything to distance herself from that. So we're not really sure what the administration would look like.
And that is the question. What will our portfolios look like in just a week from now with a 69% chance that a president candidate is going to win? And that is exactly the question. What is about to happen to our crypto portfolios? Well, to start, we need to talk about who has the biggest odds at winning this election. And right now, the stock market, according to Fortune, is pointing to a win for Kamala Harris, unless it's, of course, 1968 or 1980 all over again. Now, I'm going to cover this article, but what I want to point out is, of course, back in 1968, you had, of course, none other than RFK Jr.'s father assassinated, as he, of course, was involved with the presidency. Now, interestingly enough, I do want to point out that in 1968, RFK's father, yes, RFK Jr.'s father, Robert F. Kennedy, was shot by Sirhan Sirhan at the Ambassador Hotel in Los Angeles as he was running for the Democratic nominee. Which means despite the stock market pointing to a win for Kamala Harris, there are similarities to the exact years that, of course, the individuals similar to Harris lost. Which means that even though Kamala Harris might be being priced in, there's a lot of similarities to 1968. But to start, guys, Kamala Harris should have a cakewalk to the Oval Office. At least that's what the stock market says. It surged to record highs since the vice president entered the race in early July and has, of course, been historically very good news for incumbent candidates. In reality, of course, polls show a virtual dead heat. As Donald Trump has taken the majority lead in the last 24 hours, he has actually lost a decent amount of momentum against Kamala Harris here, now seeing a 61% chance for Donald Trump to win, with a Kamala Harris 39%. Now, this is obviously due to political tensions over the weekend, but you can even see it in DJT, Donald Trump's company, as it peaked at $54 and, of course, is down in just the last week, roughly 43%. So the probability of a Harris win would be that this would be the only time a candidate representing the fortunes of an incumbent party, I guess, meaning somebody that is the Democratic nominee after a Democratic presidency, has won every single time, except for right after World War II. Now, of course, these prediction markets are going to be uncertain. However, if this chart is to be true, what this would signal is that in the last roughly 100 years at this point, or since World War II, there have been only 2 years where the incumbent candidate, meaning the Democratic Party or the Republican Party candidate that is running as a Republican or Democratic presidency, they continue to win almost every single time. Again, the outliers only being 1968 and 1980. So clearly, we need to be ready for either outcome of this election. And this is exactly how we should prepare.
Yeah, so the Republican long basket has been outperforming since March. And what we put in these different baskets were 12 different ETFs, each representing different sectors and industries that might benefit from different policy changes and proposals. So for example, on the Democratic side, you're looking at everything from infrastructure, clean energy, thank you, as well as managed care, right, and others. And then on the GOP side, right, it's more of your cyclicals, your defensives, you're looking at materials, as well as crypto, things that might benefit from deregulation, right, Bitcoin beneficiaries, et cetera.
And so the Republican long basket, I mean, there's been a lot of talk about the so-called Trump trade doing well in the market recently as market participants are trying to price that in. Again, I would ask how accurate that, I mean, especially the last, or I shouldn't say the last election, the 2016 election showed us the danger in trying to game it out. But now that happened, is the market good at predicting, I guess is the bottom line question.
The market, I would say, tends to be good at predicting, but we are in this really interesting environment where voters are incredibly split. So if you look at 20 of the last 24 election cycles since 1928, every time that there's positive market performance in the 3 months prior to election day, that tends to favor the incumbent. The incumbent wins every time in those scenarios. So yes, top level, high level, you're looking at a positive for Democrats, but then when you dig deeper into the beneficiaries, they're telling a different story. We're not in the position of calling the election, right, one way or the other. But I would like to highlight that there is a market anticipation for potential deregulation, right, as well as for companies and sectors that might benefit from tax cuts. Now, one of the things we do want to highlight, though, that was out of consensus in our call and in our view on our baskets is the defense sector. So we called in early February that the Democrats are now the new party of defense. We got some pushback on that out of consensus view, but markets have since been catching up, right, to this
What did
call.
you mean by that, Monica, the new party of defense?
Yeah, so essentially, if you're looking at Harris's policies, she's not only looking to, extend, right, Biden's current involvement on multiple fronts, but we do believe that there's some signaling that we could get more re-engaged with NATO, et cetera. So essentially, providing fiscal support, continued policy support for those traditional military industrial complex beneficiaries. Now, on the other side, the GOP is taking a more protectionist angle, right? So Trump, yes, while we're likely to get still support for defense spending, the beneficiaries are likely to look different. So when you're looking at that traditional category, it's tracking very closely with Harris's odds right now.
So we're getting a complete flip in the script right now with what it means to be a Democrat and what it means to be a Republican. I mean, you see, obviously, the current candidates for the Democratic Party being huge warmongers with, of course, Liz and Dick Cheney. But politics aside, we need to prepare our portfolios, and here's exactly what I am doing. With the markets being an absolute coin flip, I am watching, of course, this major resistance level at $71,560. And being only a few days away from elections, what I'll be looking to do on Monday, which is exactly why you guys need to hit that subscribe button. I will be live the entire election day, giving you guys the results and covering the markets. But if Bitcoin is at a higher level than $71,560, I will be opening up a 3 to 4x short, okay? 3 to 4x short on the market, looking for a buy the rumor, sell the news event. And I will be adding a tight stop loss. However, if Bitcoin is down roughly towards $66,000 or it is falling, it is running bearish into the elections, I will be opening a 3 to 4x leverage long positions on that portfolio. In terms of my spot positions, okay, if I weren't, I mean, you already had 6 months to do this, but we've already been allocating our position to fundamental plays. We completely sold off our artificial intelligence plays all the way back in March. You guys saw me sell not only the top of that market, you've been now watching me trade and scalp trade successfully for the last 3 months. We turned $3,000 into over 100K. And even in just an episode, what was it, just a few days ago, we closed a $20,000 trade on stream. We've been having a great time. So we are hedging ourselves. All right. You have to hedge your position for no matter the outcome of this election. You guys know where I stand on this, but we have to be true to ourselves. We have to be realistic. This is a coin flip. Harris very well could end up winning the election cycle. And if we don't get that deregulation, it might mean we have a hammer coming down on our altcoins here in Q1. So again, if we are going to run up into the elections, I am going to short. If we're going to run down into elections, I am going to long. And this is, again, is simply to hedge my position. Your takeaways from this video here for spot purchases are going to be narrative based. You notice how they were talking about defense plays, tokenization. If you guys are wondering what you should be doing with your altcoins, well, it's very simple, okay? We are watching Bitcoin dominance potentially finally break right now. We've been in this huge upward trend line for what has not only been days, but what has been months and weeks of this uptrend in Bitcoin dominance. Now, on the hourly or the daily, while it does look like we're starting to pull back just a little bit, there are two major timelines you need to watch for your altcoins. I do not expect altcoins to perform until this specifically happens. Most of you are going to be allocated to altcoins, and that's completely okay. But you need to understand that markets are incredibly uncertain right now, and hedging your positions is always a safe bet. But what you want to be watching for, of course, is going to be towards the end of December or March. We've been in this rising channel or wedge pattern for roughly a year. Now, many experts out there believe we're going to come up and actually test the top of this range before we end up inching lower. But for altcoins to perform, Bitcoin's dominance needs to break. So as soon as this trend line breaks and Bitcoin breaks out of it, maybe retests and drops down, this is when you're going to get an alt season. And as you can see, that is multiple weeks still away, if not months away from Bitcoin's price. Here's, of course, how hedge funds are hedging their portfolios.
We see these are the baskets. Which basket should I buy? What are you telling them? Or are you just sort of giving them the menu and leaving that up to them?
Right now, we're giving them the menu. I think what it is that it gives you your list of choices for post-November 5th, right? Once we have a result, however long that takes. So essentially gives you a place to start for preparing for stock picking post the election once we have a finalized result. The other thing we're talking about is tax policy in 2025, and just reassuring and communicating very strongly that if you are expecting increased taxes, right, on no matter what the outcome, that there are not just tax advantage securities, products, et cetera, but that we can help, right, with those tax mitigation strategies on the market side of the equation.
And then just lastly, on the menu question, is that usually what you do, or is this election unusual because it's so close that you're taking that tack?
It is unusual, right? If you have sort of a sure thing or many indicators that agree, right, and you can start to position going forward, that signaling starts earlier. But right now, we're really advising folks to hold on, not pile in, because if you think about the GOP long basket, since it is this incredibly tight environment, those could potentially be the biggest losers. So we're not, pushing clients either way, and really instead focusing on the known, that is taxes are coming up, right? And that we're going to be really focused on that through the year and providing guidance.
So there you have it, guys. If you're somebody that's thinking about coming into this market and dumping your capital all in before these elections, it is not the smart move. Right now, hedge funds are positioning themselves to hedge themselves between whatever outcome is going to come true, whether it's a Trump administration, whether it's a Harris administration. Right now, my focus is specifically just Bitcoin, and that's because we have no clear direction on where altcoins are heading until after those election results. I believe that if we run up into elections and we get that 2 to 3x leverage short, that is a hedge, because if we don't get the election results on the 5th and it prolongs itself by days, if not a week, for those election results, you're going to get a lot of uncertainty in this market that could break down those prices. And of course, if Harris wins, I would expect altcoins and whatnot to actually perform slightly worse than if Trump were to get that, of course, position because of the deregulation. So right now, if you're sitting on your capital, now is not the time to be jumping into the market. That was when we were at 59K. That is when we were at 45K. That is when we were at 30K. Right now, what you need to understand is the menu presenting itself in front of you. There's a very bullish menu for Bitcoin and altcoins if we get a certain administration. There's also a very bearish menu for altcoins and Bitcoin if we get a certain administration. No matter the outlook, if you're looking at 10 years, 15 years, that's a different story. What we're talking about is the next 3 months. So if you're cash heavy right now, guys, hedge your positions and get ready to dollar cost average into based on the outcome of what we see on November 5th. Let me know in the comments down below what altcoins you guys are watching for, what you're planning on picking up if there is a pullback, and how you guys are hedging your guys' self against November 5th's results. Because wow, these markets are gonna be crazy.